Good afternoon, everyone. Very warm welcome on today's webinar on independence standards on audit and review engagements in Volume 1 of Code of Ethics. On behalf of Ethical Standard Board, I would like to welcome CA Aseem Trivedi, speaker for today's program, CA Rahul Sureka, Chairman, Dhanbad Branch, CA Subham Khandelwal, Vice Chairman, Dhanbad Branch, and all the participants. Now I would request CA Rahul Sureka, sir, to take the proceeding further.
Good morning, everyone. Well, I welcome you all on webinar on independent standards for audit and review engagements in Volume 1 of Code of Ethics by Ethical Standard Board's Chairman CA Dr. Anuj Goyal sir, Vice Chairman CA Mangesh Pandurang Kinare sir, and Speaker CA Ashim Trivedi sir. And introduction about the speaker is that CA Ashim Trivedi sir is a fellow member of ICI. He is specially known in the country for his weekly column, Jama Punji, in Hindi national daily newspaper, Patrika. He is the author of bestseller books on Caro 2020 and Schedule 3 for CA professionals. He is a nationwide faculty for corporate and allied law, auditing, Ind AS, IFRS, and business laws. He had delivered more than 1,800 seminars on ICI platform. His major contributions at ICI New Delhi are: he was the member of Task Force to Revise Expert Advisory Opinion in 2000. He was the leader of Task Force to revise Guidance Note on Bank Audit in 2005. He has been special invited to a committee of Board of Studies in ICI New Delhi to finalize the syllabus of Code of Ethics in CA Final in 2022 in new course. He is a special invitee to a task force for revising Code of Ethics as per revised Code of Ethics of IESBA in 2023. I would like CA Shashank Sekhar Jaiswal to continue with the CA Anuj Goyal profile. Thank you.
हेलो हेलो राहुल, आवाज आ रही है?
Yes, sir, you are audible, sir.
Okay. Good afternoon to all of you. CA Dr. Anuj Goyal is a practicing chartered accountant and Central Council member of the ICI. He is one of the youngest Central Council member from the Central Region. He has also served as a chairman of Ghaziabad chapter of the Institute of Company Secretary of India and the Institute of Cost Accountant of India. He has made significant contribution in his tenure of 17 years in the Central Council, 3 years in the Regional Council and 6 years in the branch. He is currently the chairman of Ethical Standard Board and chairman of Professional Skill Enrichment Committee and publication of CDS Directorate. He is a global-oriented man having vast experience of over 30 years and receiver of knowledge that is supported by various professional degrees including CA, CS, CMA, ICWA, LLB, MCOM, PhD, DISA, and DIRL. He is self-motivated, inspiring, and hard-working person who has proved to be a great source of motivation, especially for the youth. That's all from him. I hand over mic to the panel.
Thank you so much, sir, for giving a brief introduction of the chairman ESB, C. Anuj Goyal, sir. Now I would request C. Aseem Trivedi, sir, speaker for today's webinar, to please take the session, sir.
Yeah. Thank you, Rashmi. Thank you, Ashish. And I think on screen I'm not getting how many viewers are there, but I'm sure there are hundreds of viewers join. Thank you, Dhanbad branch, for hosting this particular event. Rahul Bhai, Shashank Bhai. Technology has made us all quite eliminated quite distance. धनबाद ब्रांच आना तो हो नहीं पाता क्योंकि इतना डिस्टेंट है कि रांची एक बार आ चुका हूं और पटना भी एक बार आ चुका हूं, बट यहाँ से वहां पहुंचना बहुत मुश्किल हो जाता है. So thanks to technology, again, today I'm with you all. So, रश्मि जी, जो अपने
Yes.
क्वेश्चन आंसर्स होंगे वो यहीं आएंगे
सर
एंड
विल आस्क सर वो बैकएंड एडमिन पैनल पे रिसीव होंगे, देन वी विल रेज इधर लास्ट ऑफ द
एंड मुझे मिक्स लैंग्वेज ही लेना है बिकॉज इट्स धनबाद ब्रांच एंड हिंदी मीडियम बेल्ट आई वाज आई एम ऑफ ओपिनियन दैट और शुड आई गो विद दिस इज इट नेशनल
सर नेशनल प्रोग्राम सर,
फाइन
लाइव
नो
टेलीकास्ट।
last time there was a request that you should have bilingual night. That's
ओके सर।
not so. Fine, no problem. So was EIRC last time, I think. Shall no problem. So let's start. The topic in itself is very important, and that is about independent standards. Till now, we had accounting standards. Till now, we had IFRS. Till now, we had Ind AS. Till now, we had standards on auditing, SRE, SRS, SQC. One more standard in the line, and this standard has been issued by Ethical Standards Board under Code of Ethics. So, whatever we are having today as our Code of Ethics, if you go to Code of Ethics issued by ICI, you will find there are uh, 3 volumes. First volume is talking about uh, international code which has been implemented in India. Second is about our own Chartered Accountants Act 1949, all the compilation of all do's and all don'ts for chartered accountants in practice or in service or otherwise occupied in India. So that is the second volume. Third volume is about the disciplinary cases. So today's topic is from the first book that's called first volume. First volume means International Ethical Standards Board has issued its ISBA code, that is Ethical Standard Boards for Accountant, International Ethical Standard Boards for Accountant. They have issued one code, and that code has been adopted by us. Being a IFAC member, we have to follow that particular code, and every member of ICI is also by default member of IFAC because our institute is a member of IFAC. So we need to follow that code in India. So though we have tried to align this particular code in every line, every paragraph of that particular code had been aligned with the local laws, aligned with the domestic laws, aligned with the domestic code. So we have aligned everything with the domestic code. Still, there are certain uh, differences, and we'll talk about that also. This particular standard is a independent standard. So, independent standard in itself, why that independent standard is there? So, there are two independent standards that are given in there as 4A and 4B. I'm sharing with you Code of Ethics, Volume 1. This is Volume 1, Code of Ethics. If we go to index of this particular Volume 1, we will see that there are 3 volumes, and these 3 volumes contains, this is the first volume, and this first volume contains complying with the code, fundamental principle, and conceptual framework. This particular part 1 is talking about fundamental principle. Whether you are chartered accountant in practice, whether you are chartered accountant in service, whatever fundamental principles you have to follow, you need to follow those fundamental principles. So the part 1 is talking about that. Then comes part 2, that is professional accountant in service. There are stringent code relating to chartered accountants who are in service. So part 2 in itself, I have requested Ashish ji previously also that we need to have one particular seminar for chartered accountant in service, because this part two has not been in reach of those chartered accountants right now, because they are busy in their day in day out operations. They might not knowing that this particular code had been applied to the chartered accountant in service. So we may have one more seminar on professional accountant in service only, so that these provisions could be made clear to them also. Then we have then we have this part third, professional accountant in public practice, and they are saying independent standards. And in that part number third, we have two independent standards. One is known as part 4A, independence for audit and review engagement, and one is part B, that is independence for assurance engagement other than audit and review engagement. So mainly these are known as independent standard 4A and 4B. And today we are going to talk about this 4A, that is called independent standard. Independence for audit and review. This is very important. Independence for audit and review engagement. So this is talking only about audit and review. So if you are engaged in any sort of audit, or if you are engaged in any sort of review, you have to follow these independence standards. Though all of us are complying with the provisions, because whenever we are conducting audits, so we are conducting audits of companies, audit of proprietorship concern, audit of partnership concern, audit of LLP, audit of society, audit of AOP, audit of BO, whatever. I'm talking about audit, and I'm not talking about audit of company only. So let's first understand that this particular uh,
वहाँ इतना पेपर मांगेंगे ना
hello. So we are talking about audit and review. So what is audit? Will it include internal audit? No. Here we are talking about audit. Audit means an assurance engagement where we are issuing a reasonable assurance that financial statements are free from material misstatement. It means it may include it will include company audit, it will include tax audit. If I talk about statutory audit, it will include definitely bank audit, it will definitely going to include cooperative societies audit. Every kind of statutory audit where we are issuing an assurance, a reasonable assurance, is definitely going to be um, definitely going to be included and covered by this particular standard. And then they are saying review. In India, we are doing right now review that's called limited review. Limited review means and statements review. That's called limited review, half yearly review. That is known as review. So whether we are giving audit or we are giving review services, we are engaged in review engagement or we are engaged in audit engagement, we have to follow these independent standard. This is very important. Now, whenever we are going for independent standard, first of all, we need to check that whether our firm is complying with SQC1 requirement. Because SQC1 says that a firm has to establish the policies and procedure designed to provide its reasonable assurance that its personnel and others who are engaged in assurance engagement are complying with independence requirement. This is our SQC1. And SQC1, whenever we apply like this only. that SQC1 clearly says that whether do you have any system or procedure which can provide you a reasonable assurance that while you are conducting an audit or while you are conducting a review or you are conducting any kind of service, are you complying with the independence requirement? Now, this is independence requirement which is required under standard or not under SQC1. Now, important is that whether the independence requirement which are given under SQC are enough. Is it enough to comply with SQC1 independence requirement? Now, what is independence requirement under SQC1? SQC1 says that auditor must be independent. Okay. Independent from mind, independent in appearance. Okay. Independence in mind and independence in appearance. I will discuss these two things later on. Then they are saying he must be uh, free from any threat. We have so many threats there. The first threat was self-interest threat. Second one is self-review threat. Third one is familiarity threat. Fourth one is advocacy threat. Fifth one is intimidation threat. So auditor should be free from every threat which have been discussed in SQC1 itself. And we should have in our uh, firm a quality control policy, which definitely ensures that we are having these kind of all uh, just a minute that we are having this kind of policies that I think this is now okay. Yeah, there was some technical problem. Yes. So our firm will have the policy so that if there are any threats, we can identify these threats. And if threats are there, then we should address those threats. If the threats are being addressed, there is no need to do anything. You have to address it and you should document it. And if at any point of time you are unable to address the threat, then you should withdraw from the engagement. Basic underlying principle is given under SQC1 itself that one should not compromise with the independence. There might be certain threats of independence, and there might be certain threats of independence, and those threats to independence. Just a minute, there's some software which is giving problem. Just a minute. Just addressing this and then coming back to you. Just a minute. Yeah. Were some notifications which were disturbing the whole talk. Yeah. So now whether SQC defines each and everything about independence. No. SQC1 just defined that you should be independence in mind, you should be having independence in appearance, you should stay away yourself and your firm and your staff from every threat. If threat exists, then you have to address those threats. If you are unable to address those threats, just get rid of that particular appointment. आप वहां से withdraw कर लीजिए. That is requirement which is given under SQC1. Apart from SQC1, they are saying additional independence requirements. They all have been set in under section 141 subsection 3. 141 subsection 3 clearly says that an officer or employee of the company should not be uh, appointed as auditor. A person who is a partner or who is in employment of an officer or employee of the company should not be appointed as auditor. A person who is holding any security cannot be appointed as auditor. If his relative is holding any security, the face value of relative should not exceed 1 lakh rupees, though it is given as a year is 1,000, but it had been prescribed as 1 lakh rupees. Then it says that he should not be indebted to the company for an amount more than in excess of rupees 5 lakhs. Then it says that he should not be actually become surety in case of indebtedness of any third person. He should not become surety to the company, and that amount is more than 1 lakh. And then he should not have any direct or indirect business relationship. Then it says he should not be relative of director or KMP. And then it says that he should not hold more than 20 audits. Date of such appointment should not hold 20, more than 20 public companies audit. And then he said that it says that he should not be convicted to the court, and then 144. Now, if I talk about 141 subsection 3, I have I will say there is a reiteration of whatever given under the threats. If you are an officer or employee of the company, that creates a self-review threat and self-interest threat both. So one should not take up review, one should not take up any audit assignment in violation of section 141 subsection 3. Even if now the question arises that it says that officer or employee, it does not say which officer and employee. Is it said here that officer or employee of this company only? Now my question is, if that particular person is officer or employee of its holding company, or if the person is officer or employee of its subsidiary company. Now, under Companies Act, if you go to interpret literally, so my literal interpretation says officer or employee of the company, not its holding company or its subsidiary company or its associate company, a company. Now the question arises that is it possible that I am officer, yeah, I'm independent director in a associate company, and I'm becoming auditor of investment company, or I'm an independent director of a subsidiary company, and then I'm becoming auditor of holding company. Or if I'm independent director in holding company, can I become auditor or reviewer under a subsidiary company? Now, if you go to section 141 subsection 3, or if I turn this question around as that I'm not current employee, I'm an ex-employee. I was employee of X Limited last year. I'll resign that X Limited, and now I'm becoming auditor of X Limited. Companies Act never stops me. If you go to here, you won't find anything you can stop me to become auditor of the company. But yes, Code of Ethics, Volume 1 stops me. Code of Ethics, Volume 1 does not define anything rule based. It all defined as principle based. It says that if you're officer or employee of a subsidiary and you become auditor of holding company, then in that holding company, all the financial statement of subsidiaries are going to merge in consolidated financial statement. And if being auditor of that holding company, I'm signing a financial statement which were approved by me only in the audit committee meeting of subsidiary, and those audit committee meeting which have been approved in subsidiary has been forwarded to holding company for its consolidation. And now I'm signing those consolidated financial statement. So it creates a self-review threat. So what I'm saying is, and what I'm trying to point out is that ethical requirements which are given under SQC1, which are required to be followed by us under this code of ethics, are broad. They are not narrow because they are principle based and this is rule based. If I say I was ex-employee of a company and now I'm becoming auditor of the company, at the date of appointment, nowhere I'm employee of the company. If I go to section 141 subsection 3, it says officer or employee. It never mentions that ex-employee. Now, again, we have to go broad with broad concepts. And the broad concept is all about self-review threat. If I'm auditor of this, I was director of this company, and now I have resigned, and now I'm joining. What about my previous year financial statements figures? Those all previous year financial statement figures are of that duration where I was an officer of the company. And now I'm becoming the auditor of the company. So this is not allowed at all. This is just an example I'm giving you that whatever laws and regulations applicable in India, which are setting the independence, they are altogether rule based, while our code of ethics, independent standards, they are principle based. So they are more broader, and we need to follow that. That is very important. Now, let's have one more example. At the beginning of the talk, I told you that though we have aligned everything in the line with all the laws and regulations applicable in India, still there are some fine points where we need to know code of ethics because it's a broader principle. Whatever given here is a narrower principle. Uh, Everyone joining this particular session should agree with me that most of us have not gone through the qualifications of a tax auditor, which is prescribed under Income Tax Act 1961. If you go to that particular qualification, that is more stranger than this 141 subsection 3. If you go to partnership firms, if you go to trust, if you go to society, if you go to club, if you go to proprietorship concern, what is qualification of auditor? It had been there in section 288, I think. Yeah. In that particular section, you will have all the qualifications and disqualification. But those qualifications and disqualifications are again rule based. And this particular independent standard is not rule based, it is principle based. Though they have included that requirement 406.1 that despite of following this standard, kindly follow These also, I will rest you assure that if you followed requirements of 4A, it will automatically take care about all these things, whatever it is. Because this 4A independence standard had been so meticulously drafted that it covers everything. It covers everything. So I'll come on the next requirement. See, this is known to everyone that in code, if a paragraph starts with R, if any paragraph starts with R, this R means requirement and it is mandatory to follow. You are not having any choice whether to follow or whether not follow. You need to follow. And the requirement 400.11 says that a firm performing audit engagement should be independent. So we should be independent always. It is required under SA 200 also. So this is not first time we are facing any independence requirement. But yes, if you are conducting an audit, Code of Ethics says you should be important. You should be independent. Requirement 400.12 says firms shall apply conceptual framework set out in 120. Now, what is conceptual framework? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. You should be free from any threat. Those 6 threats you need to be independent of, or you should not be affected by those threats. So these are two requirements which are given under application material. Then they are saying something very important under requirement 400.20. An audit client that is a listed entity includes all its related entities. For all other entities, the reference to an audit client in this part include related entities over which the client has direct or indirect control. So wherever related entities are covered, those related entities means holding company, subsidiary company, and associate company. When the audit team knows or has reason to believe that relationship of circumstances involving any other related entity of the client is relevant to the evaluation of firm's independence for client, the audit team shall include that related entity when identifying and evaluating and addressing the threats. They just want to say that whenever you are accepting an appointment of holding company, kindly keep in mind that whether the firm has any relation with any related entity which can affect the independence while you are discharging a function as an auditor or reviewer in a holding company. For example, if I'm giving management consultancy services to an associate, I am giving management consultancy services to a subsidiary. I am giving financial services to a subsidiary. I am giving investment advisory services to a subsidiary. Is it affecting my appointment as an auditor of holding company? Yes, it would affect my appointment as auditor of the holding company. So one has to be very clear on that. That why whenever you are taking an appointment under any entity, kindly take a review that whether kindly have a review that whether we have taken care of our firm's relationship with the related entities so that it could not affect independence of ours in this particular entity. Okay. Now comes that period during which independence is required. This is very, very important. When should I be independent? At the time of taking appointment, at the time of performing engagement, or at the time of giving opinion. When should I be independent? So 400.3.0 says independence as required by this part shall be maintained during both engagement period and the period covered by financial statements. Now, engagement period to समझ में आता है. What about this period covered by financial statement? That's why way back our ethical standard board has issued one clarification. I think Ashish, that clarification has been removed from the uh, our code of ethics, I think, but we could reinsert that particular clarification that if in case of a company, you have been director of the company, if you have resigned from the directorship, then at least 2 years you should not become auditor of that company. Why? In 2 years, you cannot become auditor of that company because the period covered by financial statement, my financial statement, in financial statement covers two period, current year and previous year. So unless those two periods are not over, we cannot be appointed as auditor of that particular company. That's why we had particular clarification at 2 years. Ashish, if you are there, is there any clarification right now in this particular? We had that, Rashmina.
Yes, sir. Yes, sir.
So this time we have removed it.
So which provision, sir?
This provision, I'm saying that or if a person has left a company as a director, he cannot be appointed in that particular company for 2 years.
Yes,
We
sir.
had that particular thing.
Yes, sir. Yes, sir. In volume 2, under commentary to clause 4 of second schedule, we have
Yeah.
this clarification, sir.
We have reinserted it because we have removed it before.
No, sir. As of now, we have, so in volume 2 of code of
Okay,
ethics.
fine. So that is the in line of this particular volume. So the period covered by financial statement, we should be there. So now that is requirement. So what we have learned till now, whenever we are performing audit or review, we should be independent. We should comply with the ethical requirements which are set out in SA 200 or SRE 2400 or SQC 1. Then, whenever we are taking care about appointment, we should be having in consideration the related entities. They may affect our independence. Then they are saying that you should be having a period to be how up to how much period you should be independent. So you should be independent during the engagement period. And second is the period which is covered by financial statement. Then one more requirement is there. If an entity becomes an audit client during or after the period covered by financial statement on which the firm will express an opinion, firm shall determine whether the threats to independence are created by financial or business relationship with audit client during or after the period covered by financial statement, but before the accepting the engagement and previous services provided to audit client by the firm or the network. Why to accept any assignment? I'm saying, why should we accept any assignment where we are having any kind of threat? So this requirement is saying that whenever you are performing audit, at the time when you are performing audit, you should be independent. At the time when you are performing, you should not having any relationship with the entity. But kindly take care that at the time of acceptance, whether previously you have served or your network firm has served any of the entity or its associate, if yes, then whether your assignment is affecting your independence. The same thing asked as previously is asked again in that particular requirement. Then they are saying a network firm shall be independent of audit clients of other firm within the network as required by this one. This is something very important. We have network. What network? Official network. What official network? Network which is registered with ICI. What kind of network is it? It is a network of firm. Means there are 20-25 firms who are knitted by one particular network. These firms are referring each other for different kind of clients. They are serving each other clients. They are making a pool where a client comes and then they are sharing the receipts, they are sharing the work, they are sharing the tasks, and they are jointly and severally performing the various tasks. And they are sharing the fees, having some common share of 20-25% in a common pool of network, and then they are performing their task. That's called network. In India, we have so many networks. I'm not naming here. So whenever we are having firm networks, we should take care that whenever we are taking an appointment, we should take care that none of our network member has given any service to this particular entity over which we are taking any audit or review. Any entity over which we are taking audit or review, they have not given any kind of service which creates a threat. If it creates a threat, you should not accept the appointment. Then, then there is a documentary requirement which is quite okay. Documentation may be no problem. Then sometime it may happens that mergers and acquisitions may affect our audit. For example, I had given accounting service to A Limited. Our firm had given accounting service to A Limited. And during the year, A Limited had been taken over by B Limited. And now, post merger, I'm going to conduct audit of B Limited. So, sometime it happens that during the audit, this threat comes. Nowhere there was any chance of merger of A Limited and B Limited when I am performing audit of A Limited as an auditor and I am performing B Limited as a management consultant or B Limited as a account outsourcing services. So if I have performed services as account outsourcing services in B Limited and now B Limited is being merged with the A Limited and now A and B merged financial statements will come post amalgamation to my firm, that definitely going to create certain threats to me. How should I address those threats? These have been explained in this particular segment. So they are talking about mergers, they are talking about acquisition. So when client merger creates a threat, an entity might become related entity of audit client because of merger or acquisition, and a threat to independence, therefore, to the ability of the firm to continue as an audit engagement might be created by current interest or relationship. In that circumstances, what should I do? Firm shall identify and evaluate previous and current interest relationship with the related entity that take into account to the action to address the threat. It might affect the independence and therefore its ability to continue as the audit engagement. If suppose I have been appointed as account outsourcing services, I am taking care of that. And I was investment advisor to them also. I was management consultant to them also. And all such services which cannot go along with assurance services, I have been there providing those services. And now there is merger or there is an acquisition due to which self-review threat and familiarity threat both are affected. In that case, I should not accept that appointment. I should try to address those threats. But if I'm unable to address those threats, in that case, I should not take up any such appointment that is there. So that is the first thing which we should take care of. Then another requirement is other interest and relationship cannot reasonably ended by effective date of merger or acquisition of that firm, then we should withdraw from the engagement in one of the firms so that threat can be addressed. So this is there relating to mergers and acquisition. Then they have given these examples of mergers and acquisition. I'm not taking them right now. And then documentation. Then comes if you identify any breach. Sometime it may happens that we have accepted the appointment and suddenly we got to know that there is a breach. I'm not talking about breach of section 141 because 141 has been spellbound very correctly that if after appointment any disqualifications is obtained by the auditor under section 141, it creates a casual vacancy in the office of the auditor. That's why our code of ethics clearly mentioned that subject to the eligibility requirement of the auditor under 141. It means if after taking up an assignment, section 141 is attracted, in that case, there would be a casual vacancy. There will be a casual vacancy in that case. So, problem might be there. So, if a firm concludes that there is a breach of requirement, except section 141. Now, I'm talking about breach of requirement except section 141. This part has occurred. The firm shall end, suspend, or eliminate the interest or relationship that creates the breach and address the consequence of the breach. And second, consider whether any legal or regulatory requirement applies to the breach. And if so, comply with those requirements and promptly communicate the breach in accordance with the policies. Now, what they want to say. See, deliberately, I did not breach anything. Breach comes in between. After taking up an assignment, I found a breach. Let's have certain examples of such breach. What kind of breach may be there? Apart from 141. I'm not talking about 141. Apart from 141, I'm talking about a breach. For example, relative of our partner had taken up certain commercial activities with the entity because he did not know our relationship as an auditor. For example, my brother deals in a cement industry. So my brother deals in cement industry. Now, if he deals in a cement industry and he supplies, he got a tender from that particular government company in which I'm auditor. The tender was very much open, but he got that particular tender and supplied cement to the entity. Now the problem is I'm auditor of that entity, and there is a business commercial relationship of the entity with my brother. Now what can I do? So if I'm engagement partner, then definitely there is a problem because whatever purchases during the whole year will be, they are all related to my brother. a close relative of mine, and that becomes a subject matter of audit. How should I address that particular threat? If there is a business commercial relationship, and that is called indirect business commercial relationship, that which is comes and which is coming under section 141, I need to resign. There is no other way out. How can you address this threat? Section 141 clearly mentions that you should not having business commercial relationship with the entity, either directly or indirectly. One explanation is also given that if it is on arm length and all that, but the volume, but though my brother got it through tenders, but the volume of supply to that company, it is nearly about 30% or 40% of the purchases. All the 30%, 40% purchases which are given by my brother, supplied by my brother, are going to be evaluated by me. And that creates a threat to independence. Is it possible for me that to reconstitute the audit team and change the engagement partner? Now, whether company law is allowing it? No. Company law is not going to allow this. I can appoint my partner and I can influence my partner also. So engagement partner change करने से कुछ नहीं होगा. There is no point in changing partner. That means it is not could not be addressed. Then in such case, I must resign. It will be a casual vacancy in the office of the auditor under section 141. That's why I'm saying that the breaches relating to section 141, you cannot address it or you cannot do that. But one more thing. If I have an engagement team, in engagement team, I have one employee chartered accountant who is part of the engagement team, not as an engagement partner, is part of engagement team, and his brother got an interest in this particular firm. Now, partner's brother is not interested. Employee's brother is interested. And if I remove that employee from the audit team and keep another employee there, my threat has been addressed. And I should document it that I have addressed this particular threat. So I have given you this example just because we have to take care of that threat. So one has to be very clear that if there is a threat of independence due to violation of section 141, it would be clearly casual vacancy in terms of section 139A. But if it is breach requirement, if it is a breach other than 141, it's a breach of threat. In that case, you can address such threats. And if you can address such threats, there is no point. But there must be a proper communication process in your firm so that these things will reach to you that the threat has been arised, that threat has been arose. Important is that if you don't have a quality control system in your firm, you will never got to know that you were in threats. And that's to be very clear. And lastly, what they are saying is if the firm determines that the action cannot be taken to address the consequence of the breach satisfactorily, firm shall inform those charged with governance as soon as possible and take the necessary steps and the audit engagement to compliance with applicable legal or regulatory framework. Just as I need, our framework says that you should withdraw from the engagement. Now, next one is all communication of breaches. And then they are saying documentation of it. No problem. And here comes the most important talk, fees. whether fees can create a threat to independence. Yes, fees can create independence threat. How? Undue reliance, undue dependence on client. If my firm's total revenue is say 2 CR, and out of those 2 crores, 1 crore 20 lakhs are coming from a group of companies whom I'm giving auditing and assurance services. That would create self-interest threat. थोड़ा सा अजीब लगता है सुनने में, but yeah, it's fact. It creates self-interest threat. If 60%, 50%, 50% even of the total fees of your firm is coming through a single group of companies, definitely going to affect your independence. That too, self-interest threat. And this particular segment, 410 section, deals with fees, because it says that nature and level or other type of remuneration might create self-interest threat or intimidation threat. Let me introduce one more threat here. If I have 30% of my receipts from a single client, he will always give me an undue influence that if you qualify my report, I will let you go from all my assignments, whether it is audit or whether it is anything else. And steep fall in your fees by 30% can definitely affect you. So in such case, do whatever I want. That's called intimidation threat. Threat just to remove you from the post of auditor. You can say that in the companies that how can he may remove me? But when the more than 50% control, more than 75% control over equity is there, they can manage anything. In that case, they are saying intimidation threat may arise due to fees. Here comes the most talked about requirement uh, previously, and this is something very, very interesting, the requirement. Where for 2 consecutive years, the total gross annual professional fees from audit clients and related entity represents for more than 15% of the total fees issued the firm by the firm expressing the opinion on financial statement client, firm shall disclose to those charged with governance of audit client the fact that for 2 consecutive years, the total of such fees represent more than 15% of the total fees received by the firm, provided no such ceiling on total fees of the firm will be applicable where such fees does not exceed 5 lakh rupees in respect of the firm, including fees received from the firm, other services rendered through the medium of different firms or firms in which such member or firm may be partner or proprietor. Okay. What is that? What is this requirement? 2 consecutive years. If the total gross annual professional fees from the audit client. I'm not saying from anyone, from the audit client and its related entity. And I'm talking about gross annual professional fees, not only audit fees. Whatever gross annual fees from the audit client and related party represent more than 15% of total fees received by the firm. This is very important. In that case, what firm should do? Firm shall disclose to those charged with governance of the audit client the fact that 2 consecutive years, the total such fees represent more than 15% of the total fees. Still, we are independent. We need to say them, still we are independent. That's very important. Still, we are independent. That we need to show them. But provision has been added. No such ceiling on total fees of the firm would be applicable where such fees does not exceed 5 lakh rupees in respect of a firm. 5 lakh रुपए हो तो कोई दिक्कत नहीं. To 5 lakh rupees, the ceiling limit is not applicable. Okay. A lot of representation have been received from every part of the country that why should we have to apply this particular provision in each of the entity. Then Institute came out with a particular clarification that applicability of this particular provision has been limited. Public interest entity where this particular provision is applicable right now. So level of threat, if there is, then disclose it to those charged with governance and comply with threat requirements. So we'll comply with threat requirements which are given in 410 4A and 4B, and those are given. So that is all about threat regarding the fees. Now, Rashmi, Ashish ji or Rashmi, anyone is there? Any question is there? Can you can direct it to me so that I can go ahead. Any question in this 1 hour? Okay. Now, if the fee is overdue, this is something very, very interesting again. If your client fees has not been received for the years, it will create significant self-interest threat. He will say, give me an unqualified opinion. I will release your all payments. And that creates a self-interest threat. My own fees, which became overdue, become my enemy towards independence. International standard takes care about everything. Our laws, Indian laws, have not reached so far. But yes, they are saying that there will be a self-interest threat because of your significant part of the fee is not paid before the audit report of the following year is issued. So, can I issue audit report if my previous year audit fees has not been received. Now the question is this. It is generally expected that firm will require payment of such fees before such audit report is issued. The requirements and application material set out in section 511 with respect to loans and guarantees might also be applied to the situation where unpaid fees exists. So requirement what says? When significant part of the fees due from audit client remains unpaid for a long time, firm shall determine whether the overdue fees might equivalent to loan to the client and whether it is appropriate for firm to reappoint the continuance the audit engagement. If your audit fees is pending from 2 years, 3 years, then definitely it will become a loan. And if a loan is given to client, how can you say that you are independent? So if loan has been given to a client, we can't say that we are independent. And that is the point where one has to be taken care of. Till now, in last 1 hour, what we have covered, we are just covering independent standard. We have taken care of the statutory requirements for independence. We have taken care of related entities in which the threats could come. We have covered fees under substantial fees which is there. Then we have covered accumulated fees which is overdue. And now we are coming to contingent fees. That is very important. Contingent fees is there. Can I ask my client to give me the fees which is equivalent to 0.5% of the turnover or 2% of the profit? Can I quote such kind of audit fees to my client? 0.5% of your turnover, 2% of your net profit. Why? Because under clause number 10 of the part first of the first schedule, part first of the first schedule to the Chartered Accountants Act, clause number 10 clearly mentions that you cannot quote any fees which is based on percentage of profit or contingent upon finding or result of any work. If you do that, it's a professional misconduct under that particular clause itself. It had been reiterated here, but it is well defined there. But Chartered Accountant Regulations 88 had Regulation 192 of Chartered Accountant Regulation had given certain relaxation that in following cases, you can have your fees as a percentage of profit. If you are receiver or liquidator, fee may be percentage on realization. If you are auditor of cooperative society, fee may be in percentage of paid up capital, working capital, gross or net income. If you are valuer for the purpose of direct taxes, you can have property valued. If you are giving management consultancy services, maybe resolution by council will be there. That fees may be contingent upon. If you are under fundraising services, fees may be based on percentage of fundraise. If you are debt recovery services, you are giving debt recovery services, you can have percentage on debt recovered. In case of related to cost optimization, you can be percentage of benefit derived. If the other services may be decided by the council. So this is very clear that your fees should not be contingent. It should always be fixed. After fees, there are certain application and evaluation policy regarding ethical requirements and independence. So let me talk about certain more things. Fees is there. Now comes gifts and hospitality. What is this gift and hospitality, by the way? How it is affecting? How a gift, how in hospitality can affect my independence? They're saying that you should have fundamental principles to be independent and apply conceptual framework to be set out relating to gifts and hospitality. So, what is gift and hospitality? Is it possible that a client is giving me hospitality services or a client is giving me certain gifts may affect my independence? Yes, it certainly can affect my independence because it says that a firm network of firm or audit team member shall not accept gifts and hospitality from any client, audit client, unless the value is trivial and inconsequential. छोटे मोटे गिफ्ट्स चलते हैं, छोटी मोटी हॉस्पिटलिटी चलती है. But if the gifts and hospitalities are quite value, having quite value which can affect your independence, you shouldn't have that point. So gifts and hospitality, if I talk about gifts and hospitality, is definitely going to create a problem. So be enjoyed. You can enjoy there, and no cost will be from your side. It all sponsored by the client. So these kind of hospitalities may affect the independence. So a firm, a network firm, or an audit team member, neither firm, nor network firm, nor an audit team member shall accept any gift or hospitality from audit client unless the value is very trivial and inconsequential. Okay. So we should not having any inducement from the audit client. And if there is any inducement from the audit client, you should not entertain that. That is the simple gifts and hospitality. Then another intimidation threat, which may come from the client, that if you are going to qualify my report, or if you in a limited review you are qualifying my report, I am going to sue you. Now, in that case, there may be a self-interest and intimidation threat may be created. Now, how should I handle that situation? When client has initiated or threatened to initiate a litigation with me, the relationship between client management and audit team member must be characterized by complete canal and full disclosure regarding all aspects of client's operation. That is there. But what is the requirement? So requirement is very simple that if a litigation involves an audit team member, if there is any litigation, for example, there is a litigation by company on any member of the audit team for whatever reason is. In that case, you just eliminate that individual from the audit team. If there is litigation going on between firm and the audit team member, just remove him from the audit team. That is very important. And second, if see, there are two aspects. One, when the firm has been threatened that if you are going to give qualification, we will sue you. That's called intimidation threat. It is there under the fundamental concept. What they are saying here is actual or threatened litigation. If there is any actual litigation or threatened litigation over any team member, then if any team member which is having any actual litigation from the company or any threatened litigation from the company, he cannot be part of the audit team. If he becomes part of the audit team, definitely going to affect the independence. That is the point. Then comes financial interests. Whatever I have talked about, accumulated fees over there. Now I'm talking about financial interests. Loans given or loans taken. A very interesting analogy you can define from here. Under Companies Act, if you go to 143, 141 subsection 3, it talks about indebtedness. Whether auditor has taken any loan from the company exceeding 5 lakh, then in such case, you should not take up an audit assignment and you are disqualified from becoming an auditor in a company. Now, important is if you are talking about loan taken by the auditor from the company, let's have a vice versa. Company has taken loan from auditor. Very important. Not debenture, loan. Company has taken loan from the auditor. Auditor become surety for the company in a bank. Both are not covered under Companies Act. If you go to 143.3, 141.3, you won't find these two problems. So as I said in beginning of this lecture, that this independence standard is very broad, broader than any law, any existing law in India. It covers loan given also. It covers guarantee given also. So it covers both. The law is not covering. It is covering. It's very important. So holding a financial interest in audit client might create a self-interest threat. So this requirement is that you should not invest in the client. You should not give loan. You should not take up any loan. You should not give any guarantee. Should not having any guarantee. Neither you, nor your firm, nor your network firm, nor your audit team member, and others who can affect your relatives. They should not be financially interested in the entity. Very clear. So, if you have any financial interest, then just don't take up such an assignment. If you have financial interest in an entity which is controlling the audit client, sir, if you go to section 141, subsection 3, the loan, guarantee, and security are being taken care in 5 companies. That company, that company's holding company, that company's subsidiary company, that company's fellow subsidiary company, that company's associate company. So the requirement of 141 subsection 3 covers 5 entities. Not only that company in which you are taking up an appointment, also the holding company of its subsidiary company, its associate company, its joint venture company, and fellow subsidiary entity. They are covering 5 entities over there. And they are saying the same. So I'm not going to take more time over it. Now, this is something immediate family. Here I can say our Companies Act is more extensive. The definition of relative under Companies Act is vast. Immediate family members. We don't have that concept of immediate relative under Companies Act. In India, we have a simple concept, and that simple concept is very clear. Relative means R10. If we go to section 2, clause 77 of Companies Act, we may have a plethora of relatives. Who are the relatives? Members of HUF, auditors, members of HUF. Yeah, auditors, HUF, any member. Auditor's father, auditor's mother, auditor's spouse, auditor's sister, auditor's brother, auditor's son, auditor's daughter, auditor's son's wife, auditor's daughter's husband. They all are relative under the Companies Act. And if any one of them has any significant financial interest, you cannot take up an assignment of audit of the company. So if I talk about audit, if I talk about review, section 141 subsection 3 will be applicable. So that will take care here. Then comes loans and guarantee, I have covered. Business relationship, that I have covered. My Brothers Cement Company is supplying that business relationship. It is the same whatever I am, whatever given under Companies Act. You see, this is given under Companies Act. Family and personal relationship is not there. Rashmi, any questions are there? Should I address those? Because now, whatever the time left, I can address those questions. If questions are there, kindly give me the questions so that we can address, because major part of the things are covered here. So if there are any questions relating to it, we can take up those questions.
Good evening, sir.
Good evening, Nan.
Sir, I have got some 6 questions.
Okay.
So, sir, first question is whether auditor can provide recommendation on current and deferred tax liabilities for the company for preparing accounting entries.
See, we can guide them, but we cannot take responsibility of computation of that, because that would create a self review threat. Whatever DTA and DTL you are compiling for your client and then auditing the same. So it creates a self review threat. That's why we should not take up such responsibility.
Sure, sir. So, second question, if the auditor of company has been offered free subscription of a club for 1 year, is it okay to accept it?
If that club subscription is not is inconsequential, means it will never going to affect the independence of auditor, because it's a very low fees club or kind of a common thing which is not such kind of a stature or such kind of a status which can affect the independence of auditor, you can take it up. But if it is a major club, if it is a matter of status to be a member of that particular club, if it enhances the social status of a auditor to join that particular club, that would come within the hospitality. So that will not be addressed. That should not be accepted.
Yes. So next question, auditor is appointed in proprietor capacity by the company. Later on, director's son has joined the auditor in partnership with auditor. Can the firm continue as auditor of the company?
No. As soon as director's son joins the partnership under Companies Act, the firm will become disqualified, because if any partner's relative is KMP or a director of the company, you cannot be appointed as auditor of that company. Even the day when the director's son joined the firm, the day there will be a casual vacancy in the office of the auditor.
Yes. The next question, can a member assist or review TDS, income tax, GST returns being filed by company where he is a statutory auditor or he is a tax auditor? Can the tax be paid by such auditor online if client is not conversant with e-payments?
आपका थोड़ा सा वॉइस क्रैक हुआ था, एक बार आप वापस पूछेंगे?
Yes, sir, sure, sir. Can a member assist, review TDS, income tax, or GST return being filed by company where he is statutory auditor or he is tax auditor? Can the tax be paid by such auditor online if client is not conversant with e-payment?
Okay, let me give a detailed demarcation of the duties. This is very commonly found in pan India level, where the client is not conversant with the portal, with the nitty gritties of law, with the uploading of returns, with all. Can we assist our client, audit client, to upload his GST return from our office, or to pay through us because he's not conversant with the payment method? Or should we review his tax computation or GST computation? Or should we prepare GST computation and tax computation? Sir, as far as preparing GST computation, preparing tax computation, I will say there is a self-review threat. You can advise client a good um, firm which can compute their taxes, which can compute their taxations. You can give them good hands to compute all those things, but you cannot uh, prepare their tax returns. Yeah, if they have prepared their tax return, they have computed their taxes, and they just want us to upload the return, we can upload the return. No problem. From our office, we can upload the return. But yes, whenever you are taking fee from them relating to payment of their taxes, kindly keep one thing in mind. Let's have a separate current account of our firm for such payments so that whatever payment come from one client is paid through that particular account. In any case, if you forget to pay the taxation of client and the money was within your own account, and if that balance goes beyond that particular amount which is deposited, it would be then treated as misapplication of money, and it would be unnecessarily create a chaos. In that case, we need to have one separate account where the client's money is parked, and that client's money is parked just for a few days, so as to deposit that into GST or income tax portal. If they do not have any converse, they are not conversant with that, so we can do that. This is the
Yes.
answer for that query.
Yes. The next question. As an auditor for financial year 23-24, should independence be checked for financial year 22-23 also? Is it mandatory?
Yes, it is mandatory. You should be independent in 22-23. You should be independent for 21-22 also, because previous year figures are lying in the financial statement. In that particular period, you should also be independent.
Yes. The next question. Threat fee exceeding 15%, then how is it possible to ensure independence by merely informing those charged with governance? So this is the question. How it how is it possible to ensure independence by
Can you please,
merely informing those charged with governance
can
for
you
threat
repeat
fees?
it? Can you repeat it? Your voice is again in the pool. Just,
Yes, sir. Yes, sir.
yeah.
Yes, sir. How is it possible to
Mhm.
ensure independence by merely informing those charged with governance? This question is for fees exceeding 15%.
Yeah, 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 yeah. See, if you inform to those shared with governance that your team is independent, your firm is independent from all your policies, it is an acknowledgement of responsibility. It is an acknowledgement of how responsible the auditor is, and auditor is disclosing that though that these are the facts which I am declaring with you. So all these facts which we are declaring through. So just a minute. So all these things, whatever you're talking, declaration. Why that declaration is there? Just to have a transparency. See, I'm independent, but in case of public interest entities where the public money is parked. In such case, what we have to do? We have to give an acknowledgement of responsibility that we are declaring that we are independent. So that declaration is just for the sake of transparency, nothing else.
Yes.
Independent तो आप हैं पहले से.
So one more question I have received.
Yeah.
At many places, code of ethics refers to public interest entity, but it is not defined anywhere within definition part. Can you explain where it is defined?
In the glossary itself, it is defined public interest entity. PIE.
Yes.
Wherever the public funds are involved, that is a public interest entity. That's it. Being it as a PSU or if it is a listed entity, if government money is parked there, they're all public interest entities. Wherever public money directly or indirectly coming through in your capital, that would be a public interest entity. But definition is given in the glossary itself.
So this is all 7 questions that I had.
Okay. So I think Rashmi ji, it's over. No more questions. Okay. So at the conclusion, I must say that whatever question came to me, those all questions were very pertinent question. I must thankful to all the listeners. Though there cannot be a direct communication with you right now, but you can mail me. You can mail to ESB itself, whatever questions you are having. If you have any questions, kindly let the ESB known. Today, Anuj Bhai is not there. I think he's busy somewhere else. Chairman, Ethical Standard Board, very dynamic and dashing personality, taking this Ethical Standard Boards to newer heights. Volume 1 is about to come. It's quite near to, we are near to finalize the volume 1, though this time I could not be part of that particular volume 1. I can contribute that much to the volume 1, but yes, surely the Ethical Standard Board is coming out with the Kamal Bhai has done a lot of work to that particular uh, volume 1 along with Anuj Bhai. So Ashish ji, I'm giving all the best to all of you for that particular volume 1 which you are coming. I think today was the last meeting. I could not attend that meeting due to some preoccupancies. So thank you very much for inviting me and making me part of this particular wonderful seminar. Thank you very much. Thank you, Anuj Bhai, in his absentia. Thank you, Ashish ji, and thank you, Rashmi.
Thank you, sir. Thank you, sir.
Thank you.
Thank you very much. Thank you, sir.
Yes, so please end the meeting.
Recording stopped.